Good evening, everyone. Time for another silver update. You're looking at the 15-minute chart, and I've drawn the current accelerated trend line with the action that we had today. And I really want to examine this closely because it's very interesting. Let's go ahead and put the volume on, and you can see a very strange anomaly occurring here. And what we're going to do to examine that closer is pull into the 1-minute chart. Now I've drawn some things here on the 1-minute chart. The first line, well, the other line I had drawn but it's not on here, is a accelerated volume, what I'll call a front-running situation of this volume on the 1 minute, and it's still live. I took a screenshot, but it's not on the tick chart, but it's still on the 1-minute chart, so that functions for the purposes I'm going to use it for. You can see that this volume spike here that occurred at roughly 1404, maybe 1403, was roughly 50,000 contracts of silver. Now, the reason why I drew this trend line here, and then I drew this up line that corresponds with the beginning of the pre-volume spike before this spike, is that this, in my mind, is clear evidence of front-running of this manipulation that occurred today. So, if we look back out to the 15-minute chart, we had we have to put the MACD up, but we had a near crossover and rally from the MACD. You can see the MACD low. I'll draw a line that goes back to the historical spots on the MACD. So you can see we touched that line. Previously was touched a number of days ago, and back here and back here. So we were set for a big rally on the MACD, and we were rallying in price. You can see price was rallying within the trend line until we got this sell-off. Now, let's go back to the 1 minute and take a look at the volume. The volume came in at roughly 1403. You can see the front running of this volume came in starting nearly a half an hour before. So the real volume didn't come in until actually at this price. But the people who knew about this activity were selling before this activity occurred. What was it that occurred at this time? We don't know. We just know that somebody dumped 50+ thousand contracts. So let's do some quick math. We know that a contract is 5,000 ounces of silver, and someone dumped 50,000 contracts in 1 minute, and that equals 250 million ounces of silver. So someone sold 250 million ounces of silver in 1 minute. Now, it would seem surprising that the actual volume registered here, when you understand markets, that if someone foretold their book that they were trying to find buyers for this enormous amount of silver, then the price would be set lower and lower and lower and lower until the bids were found. So, but you have your front runners here. You have the people who knew this was coming. So this is more evidence that this is a completely corrupt market. The COMEX is a completely and utterly corrupt market for this type of information to leak beforehand. But anyway, so looking at the math, someone dumped 250 million ounces of silver. Now, If we do the math on that, we've got 250 million times the price of silver, which is 40, and that gives us $10 billion. $10 billion worth of silver was sold in 1 minute. Now let's think about these numbers. 250 million ounces of silver is roughly 1/3 to 1/4 of all the silver mined in the world for an entire year. The United States only mines roughly 50 million in a year, so that's 5 times the volume of all silver mined in a year sold in 1 minute. So this is, in my mind, this is proof positive that this is a manipulated market that is front run and is not real silver. Is there any miner in America? Think about it. If all of the mined silver in America amounts to roughly 50 million ounces, and someone sold 250 million ounces in 1 minute, could that be an American mining company? No. Could that be a foreign mining company? No. It couldn't be any mining company. It couldn't be any hedger. It has to be either a bullion bank or a futures speculator. So who of all these speculators would dump that much silver, and not only that, telegraph it before they did it? So you get my point. So let's clear these off, and before we do that, let's get our timestamp here, because we've got the exact sale point of this, which I said before is roughly 1403. So let's remember that number, and we're going to clear these charts off. And what we're going to do is we're going to do a direct overlay of gold, because if you remember, gold took the hit as well. And we'll do a direct overlay of the gold price over the silver price. Now you can see that the sell-off is roughly the same. The gold spot is in blue and the silver spot is in the black. So this chart, what this chart tells us is these markets are fairly well arbitraged together. So even though people say, well, silver is no longer a precious metal and gold, etc., it's pretty clear that these are arbed very tightly, regardless of what you think. So what I want to do is take a look at the gold market itself, remembering the timestamp that we had on silver. Now if we do a show volume on the gold chart, we can see actually we had a lot of volume back here, which didn't correspond to any type of price move, but we had a volume spike that roughly corresponds to the move that we had in silver. And if we draw a line up from that and draw as close as I can a line up from that line, you can see that when we get over this line, we're looking at 1408, between 1408 and 1406, roughly 6 to 7 to 8 minutes after the hour was when the volume came in on gold. So again, we want to go back to silver, and we can see that the volume came in on silver at 1403. So silver was front run on that volume, and it was sold off on this volume before gold. Now what does that tell you? It tells you what I've been saying all along. And let me get my page up to remind you. Sorry, that's my Bitcoin channel. To remind you that physical silver is the stake in the hearts of the financial vampires. Physical silver is the bullet that slays the Wall Street werewolves. This chart shows you why. Because they did not take gold down. They did not need to take gold down. They front-run silver. They telegraphed their intentions to their traders. And they let them know right here that they were going to do a silver dump in the paper. It has to be in the paper. This is 250 million ounces of silver sold in 1 minute. Again, that's 1/3 to 1/4 of all the silver mined in the entire world. That's not a mine. That's not an investor. That's someone with unlimited amounts of money. That's $10 billion worth of silver sold in a minute. So this is a manipulated market. It's not a real market. We're looking at the end of the COMEX. We're looking at desperation by the powers that be in the face of a rapidly rising, unrelenting, unstoppable silver price. And they're pulling out the stops. The only question is how much you're going to pick up at this price, because the fundamentals tell you that it's going astronomically higher. And I'm just pointing these things out to show you that the powers that be are desperate. They're using desperate maneuvers of manipulation to sell silver that does not exist, that has never been mined, as the Chinese market is coming online Friday and the clock is ticking. Their days are numbered. They're doomed. They are doomed to bankruptcy. They're doomed to open ridicule and shame and possible prosecution and prison time for their manipulation that they've done to the silver market. It's clearly the silver market, not the gold market, that is the market that is manipulated by the powers that be. And I think that I've proven that to you. And it's evidence that you need to keep stacking, because when this is exposed, the price is going to go parabolic. And we'll talk to you next time.